A question. What's more scary than trading indices, honestly? So indices get kind of like a bad rep, especially US30. Everyone is calling my favorite pair Dirty 30 because of the way that it moves. And I'm going to show you today how I'm able to predict the market trends and how I'm able to make predictions short term and long term. For the purpose of this video, I'm going to just relax on this 4-hour time frame. The first thing you want to do, if you have not been following price action for the week, maybe you're rusty a little bit, you want to see what has happened, what is happening, and you want to use that information to find out where the market may want to go to, what has it left behind, and where you can participate. So first things first, I'm checking this out. I'm just going to do a markup and explain exactly what I'm looking at. I'm seeing a small little demand zone here. And guys, there's no one way to tackle the market. You can use order blocks, you can use supply zones, you can use demand zones, key levels, whatever it is that you're understanding, it's perfectly okay. So I'm noticing we had a little demand zone here. From that demand zone, we got this push up, right? From this push up, it looks like the market started to travel down and we eventually took that demand zone out. That brings us to this new area of demand. Are we seeing that? Are we seeing these wicks? So it's letting me know, right? Whatever is happening, price is letting me know that there were a few attempts to travel beneath this level, but it was unsuccessful. So price is letting me know that this is a demand zone. We're not traveling down beneath this area for the time being. So let me continue on with what I'm seeing. I'm noticing that we have imbalance right here. I'm noticing that we have some imbalance. Okay, wonderful. Okay, what I'm going to do is I'm just going to take that line out. Okay, we have imbalance in here. That's what the market left behind. I'm going to show you in a minute what I'm going to use that imbalance for. And then I'm noticing that this was a supply zone. We had a little supply zone right up here. Right? And notice how I have these areas highlighted and I don't have these areas highlighted. I'll show you why in a minute. So I'm noticing that this was a supply zone. So before price came up and broke that supply zone or created a new high, right? This was an area, these were the two zones that price was traveling in between. So I like to call this kind of consolidation, accumulation. This is where we start to accumulate positions and orders and things like that. And so do we want to trade in that consolidated supply to demand? No. But understand that retail traders are looking at these areas as support and resistance, right? And what happens to retail traders who are trading support and resistance? They eventually become targets for liquidity sweeps, guys. The name of the game is liquidity. Throw your strategies out, throw everything out, and follow liquidity in the market. So we come up and we take out the stop losses of these poor retail traders who enjoyed selling the market from this area. But not only that, if we're looking at structure, price came up and it made a new high. So guys, what I'm looking for in this market is for me to continue to take the market up, right? But before I do anything, guys, I have to find an entry, I have to find an exit, and I have to know what I'm going to do to control the risk, to protect the equity in my account. So first things first, guys, I labeled this area as imbalance, right? Cool, perfect. What I'm going to do with that area is I'm going to look for an entry right beneath that imbalance right there. This is going to be where I want to get entered. Now, why am I not interested in chasing price? Why am I not hitting the button to start buying just because I have a feeling that the market is going to buy? Well, because if my prediction is accurate and price made a higher high, then I'm going to look for price to make a higher low, right? We're thinking about structure. I'm also looking for price to fill in that imbalance. And I'm also looking for that demand zone to be respected, meaning price should not come beneath that demand zone. Right? So those are a few of my confirmations. So when you are waiting for your setup rather than hitting the button and actually entering the trade just because you see or feel like the market is going to go in a particular direction, it gives you a chance to set your trade up properly to win. And this is what I call a high probable setup. So because I'm waiting for these confirmations and not just going in to buy, I'm going to actually see if my prediction is correct. So if the market pulls back, let's get out a tool If the market actually pulls back but respects this area, right? If it comes back and it respects this area, this would show me that I am correct. I can enter the market here and I can continue to take the market up, right? So that's my plan. I already have an entry plan. I'm not going to overthink this, guys. The last thing you want to do is to overcomplicate your plan. What I want to do now is find potential areas where I can exit, right? The entry is important, guys, but knowing when to get out is probably more important than that. You can get away with a bad entry. Not knowing when to get out is not good. So we have a high here. We have a high here. And we have a high here. Now, these are my 3 areas where I may want to exit this market. So now I have an exit strategy, right? I have an entry. Now it's time to figure out the risk. Okay, so what I'm going to do is I'm going to set my risk here. Now, why am I setting my risk here? Well, because guys, it's clear that this is a demand zone. So even if I have intention on taking price up from this level, price could very well go to this demand zone, respect the demand zone. But if it does not respect the demand zone at all, guys, and I get stopped out, well, I'm okay with that, right? Cool, no big deal. If price comes to this demand zone and it respects this demand zone, well, then I have an entry that's a little bit more into discount. Now, why am I waiting for price to pull back? I just said it, but why am I waiting for price to pull back? Well, guys, because you always want to get some sort of a discount. If you are in a bullish market, you want to get your entries beneath the current level of price, right? You want to get it beneath the current level of price. And if you are selling the market, you want to get in above price. This is that premium area and this is the discount area, guys, right? Always look for the deal. If you don't got a deal, then you don't got to trade, right? Okay. So now that I have my risk management, I have my entry and I have my exits, I need to calculate what I'm going to make here, right? So first things first, I want to count how many points this is. So from this level to the first high, we have 755 points. If we go to the second TP, we have 1,167 points. And if we go to TP3, we have 1,754 points. Really nice setup. Now, if you're not comfortable with holding a trade, you can get out at any point in between anywhere, guys. But the entry and the stop loss is very important. So now I want to calculate my risk. Okay, so let's go ahead and pull out the long tool, right? I don't know which lot size you're using. Let's just say I'm interested in getting in here and I have the stop loss here temporarily, right? Now, because I'm getting in, this is a 4-to-1, right? Because I'm going for so many points, and because right at this moment of my entry, right, and we don't want to go with anything beneath a 3-to-1. So this is a 4-to-1. Because my stop loss is rather big, I'm not going to enter that first trade with a big lot size. I'm actually going to go with a micro lot size because I'm going for a huge amount of points and I have a rather huge stop loss, even though it's a 4-to-1. And I need to see some type of breaks of structures happening, right? And so when I start, I'm going to go in with a risk entry, not heavy, guys. We don't want to go into drawdown, a big drawdown, get scared, close out the trade before we go into some decent profits, right? Because there are some things that is going to happen. Even though we want the market to go up, there are some things that are going to happen, and it's called manipulation and liquidity grabs. So guys, remember that risk entry. I'm going to go ahead and take this off. This is the idea, right? So let's check this out. Now let's take a look at this market really, really closely, because in order for you to succeed, you want to have an institutional trader mindset, right? And if you have an institutional trader mindset, it means that you are always looking to be on the opposite side of those who have a retail trader's mindset. So upon looking at this chart right now, I can already tell that price is going to push its way back up. Well, push its way up into this area right here, into this OB. It's really close to it. Price is going to go to this OB. From that OB, this is where I'm looking for price to come back down, right? Because in order for price to get to my area to come and pick me up, there are some things that need to happen. Price needs to, it may need to buy some more. And this is where traders who have a fear of missing out actually buy early, because they're so afraid of missing out. The minute that they see price continuing to buy, they get into a trade. So price is going to more than likely buy into this bearish OB on the 4-hour time frame, and then it should come back to my area. From this area, I'm in a heavily discounted area. I'm in a really nice discounted area. Price is way cheaper than what it was at this OB. But what is happening is that retail traders who is looking at this is like, okay, I'm looking at this. Price is definitely selling. They are going to sell this market. And it's going to be a nice exchange. We're going to shake hands with the retail traders because they're selling and I'm going to buy those positions from them. It's a nice exchange. So guys, let's go ahead and let this play out so I can show you exactly what it is that I'm talking about. So let's press play. Price starts to push its way down. Okay. Nice little wick up into that bearish OB. Price makes its way down, right? After it starts to sell, I noticed that, I know a lot of traders are jumping into that, right? So the first people who got wiped out is these sellers. Price comes up, price accumulates, it starts to buy up, and they get out and say, okay, I'm going to sell from here. Or people who are not understanding what's happening, or they have not noticed that this is a demand zone down here, right? So they start to sell from right here, right? Okay, nice. So as price is moving down, I notice that there's another bearish OB right here. So this is where more sellers get in the market. More than likely, price should be climbing back into that bearish OB there. Let's check it out. Price pushes down a little bit, then it goes back up. Sellers come in, more sellers. And then let's see, really, really bearish candle. As you can see, we don't want to be moved by those candles because it looked aggressive. It looked really, really bearish. And this is where you may start to maybe change your mind. And maybe you want to target, instead of seeing this as a demand zone, maybe you're seeing this as lows that need to be taken out. Now, you may ask me, what made me decide that that was an area that may be respected? And this is before we even reveal anything. Well, guys, this is accumulation. I'm noticing that this is accumulation, that is a demand zone. And then I notice that we come up and we make a high. A few confirmations on my behalf. And if I'm wrong, I'm wrong. I go back and I study. But notice how aggressive those candles looked. So let's go ahead and put that demand zone back there. And right now I would be in this trade, following confirmation on maybe possibly the 1 minute time frame. So when price comes into my area of interest, I go down to the 1 minute time frame, and I want to see higher highs, higher lows, higher highs, higher lows, that kind of pattern before I enter. I enter in at one of those retests. Now, let's check this out. So I'm in a trade and a buy, and of course, guys, there are traders who are trading against you, right? Counterparts. Cool. So I'm still looking at the market from a retail trader's perspective. And if I'm looking at this correctly, this looks like yet another opportunity to sell. So maybe a person is stacked in with quite a few positions, and price comes down, and their eyes, they're seeing a lower low, and they're looking for a lower high and a lower low, right? Right now, it really looks bad. It looks like I may have this trade wrong. I know how it looks. And so, guys, let's check this out. Okay, you guys saw that candle? It looks scary, didn't it, right? But we come up and we take these traders out. Now, we're going and we're grabbing liquidity. Those stop losses are hit. We're waiting for this stop loss to be hit. Let's go ahead and press play. We respect it just a little bit, right? And then let's go. Okay, rejection. Okay, that's cool. But we come up and we take these stop losses out as well, right? These are called liquidity grabs. Now, guys, last but not least, we have a high right here, and we're just wiping out stop losses. So remember, the traders who have their stop losses maybe right up here. Those are the last targets for my trade. And let me go ahead and press play. Okay, little pullback. Okay, and we finally stop out those traders as well. So guys, this is how I'm able to do what I do. Thank you guys for watching.